Markets are back to very overbought conditions. Last time we were this overbought was just before we had that correction back to the 20-day moving average, and that worked off, some of that overbought condition. Then we rallied back up, and again, as we kind of talked about here, upside has been limited. We're making some small gains. Markets are kind of grinding higher, but they're not just running off to the moon at this point. But we are very deviated once again from that 20-day moving average, very deviated from the 50-day moving average. And these kind of deviations can't last for a long time. Here's what you need to know before the bell this morning. Nothing really alarming or new here, of course, as we talked about last week. We have just continued to kind of grind along this 20-day moving average, and again, absolutely nothing seems to be wrong here. Markets are back to very overbought conditions. And again, last time we were this overbought was just before we had that correction back to the 20-day moving average again. And that worked off, some of that overbought condition. Then we rallied back up. And again, as we kind of talked about here, upside has been limited. We're making some small gains. Markets are kind of grinding higher, but they're not just running off to the moon at this point. But we are very deviated once again from that 20-day moving average, very deviated from the 50-day moving average. And these kind of deviations, as we saw, previously, can't last for a long time. And again, we're fairly deviated from these longer-term moving averages, which you're eventually going to kind of get that corrective action just to relieve some of that overbought condition. And again, we're very overbought, just like we were, just a couple of months ago. So nothing to be overly concerned here, but do expect a bit of a pullback here just to kind of let markets reset themselves, kind of in this phase. This has been a very narrow rally, as we've talked about previously. If you take a look at performance of the top 10, really the top 3-4 stocks versus the rest of the market, there's a big gap in performance. And last week in particular, while the market was making, kind of these all-time highs last week, you had very, very narrow breadth in that rally. When you take a look at across the market of the S&P 500, most of the stocks were not making new highs. And in fact, we have more and more stocks in terms of, their trading that are not trading above their 50-day moving average, more and more stocks not trading above their 200-day moving average, even though the market itself is doing that. Again, that's that narrow breadth that we've been talking about for a while. Narrow breadth does not mean, by the way, that the markets are going to have a big correction at any moment. It's just a function of the fact that we have fewer and fewer stocks because of their weighting in the index that's pulling the index higher. So when you take a look at your performance in your portfolio, it might not be doing as well as the market because you don't own just 3 or 4 stocks in your portfolio. You have these other stocks that are not as performing with the markets. In fact, in a lot of cases, these stocks are underperforming across the board. But we're back to that kind of phase where, again, we've got this chase for the largest stocks that are generating the earnings growth. We're getting ready to head into the end of the quarter, so we're going to have quarter end rebalancing coming up for portfolios. So there's a lot of managers that are going to have to buy these stocks going into the end of the quarter to get their weightings where they're supposed to be when they come out with their quarterly report. So again, nothing says a big decline is coming, but pay attention to breadth. It is important, and it is getting weaker. Okay, that's what you need to know before the bell this morning.